Okay, welcome back to another video. I wanted to make a video today on candlesticks. So these are covered on my website anyway, ottrades.com, and I'm pretty sure I've made a video which is it includes a lot of the candlestick information within the video, but it's not dedicated to candlesticks. I think it's the introduction to Forex trading or something like that. However, I'll dedicate this one to candlesticks. It'll be a bit of a shorter video than that, and hopefully you'll get to grips with candlesticks and reading the story which each candlestick tells you. So to get straight into it then, let's get rid of the chart. Very basics, hopefully you're already aware of this anyway, and there's plenty of videos out there if you aren't aware of this. However, we'll cover it anyway, just because, like I said, this is dedicated to candlesticks, so we may as well cover it. Fill this in green for now. So, in terms of the candlestick makeup then, so this is your standard candlestick. It represents a period throughout time. So here at the moment, I'm on the Euro-Dollar 1 hour chart. All that means is every candlestick represents 1 hour, is a 1 hour time frame, so it represents 1 hour in time. So at the bottom here you can see it's the weekend at the moment, so we're on the 11th of April, so the market is shut Saturday the 11th of April. So last candlestick close was the 9 o'clock candle on the 10th of April. The one before that, 8 o'clock on the 10th of April, 9 o'clock, 7 o'clock, 6 o'clock, 5, 4, 3, so on and so forth. So each one of these represents price action within an hour trading range. So we can go to the daily, and now each candlestick represents 1 day's worth of price action. So here we've got the 1st of August 2019. Throughout this day, price ranged from the low of the candle, which I'll cover in a minute, to the high of the candle, the open and the close. So this is telling you a story of what price did throughout this day. And then if we drop back down to the hour, it's telling you a story of what price did within that hour. And you can change these into all of these different candlesticks. I personally don't recommend going lower than, say, the 15-minute time frame. I only trade on the hourly time frame. I don't even look at the daily or 4 hour to get a bigger picture, because all I care about is getting in and out relatively quickly based on my patterns on the 1 hour time frame. If I were to start trading other time frames, say the daily and the 4 hour gives you a good picture of the overall direction of the market, the overall sort of story, the bigger picture. The hourly time frame is a good time frame to trade off of, and the 30-minute and the 15-minute are potentially good time frames to look for entry reasons if you're that way inclined. 5-minute, this is where things start to enter a grey area. I personally wouldn't enter the 5-minute, but I know some people who do actually go off the 5-minute chart, but I wouldn't recommend this, and definitely not the 1 minute, because everything's happening way too quickly. And you've obviously got the spreads to sort of play with as well. So let's get into the actual candlestick itself then. So let's call this the daily candlestick. So say this is the 10th of April. So on the 10th of April, it's a green candle, or in my case a white candle. So white means prices opened and closed higher, so prices moved up. That is what I class as a white candle. These sometimes are green, sorry, most of the time they're green. If prices move down throughout the day, that is a black candle or a red candle. So white is up, black is down, green is up, red is down. So what do we have? So because prices moved up throughout the day's trading period, this price here is the open price. So whatever price this is at, so follow the horizontal line to the right, 1.08903. So price opens at the start of the day, so midnight on the, say, call it the 10th of April, midnight on the 10th of April, price is opened at 1.08903. That is the open price. Throughout the day then, price has moved down lower. Now we don't know when this has happened throughout the day. All we know is that throughout that day at some point price has moved down to this point here, which let's just call 1.08659 on the right hand side there. 1.08659. So price has opened here, 903. At some point throughout the day it's moved down to here, 659. It's then moved higher to 1.10349, and then it's finally closed. So at midnight on the 11th, or midnight that night on the 10th, it's closed at 1.10123. So throughout that day, price started here, it's moved down, it's moved up, and it's closed at this price here. It's closed higher than it opened. Therefore, it's a bullish candle. Bullish means price is moving up. Bearish means price is moving down. So price opens, it hits the low, it hits the high, and it closes. So this is the close of the candle here, higher than it opens. So a bullish candle. If we have the opposite, a bearish candle now, which are my black candles. So a bearish candle is the reverse. Price closes lower than it's opened. So in this instance, we have the open of the candle at midnight or 1 o'clock in the morning on the 10th of April, 1.10105. Price has moved higher. Price has moved lower. And then eventually at 11:59 in the evening, it's closed at 1.08903. So it's closed lower than it opened. That's a bearish candle because price has moved down. Hope that makes sense. Now, the difficulty with this is, which is why we change, I was on about earlier, we go from the daily chart to the 4 hour to the hourly, because it gives you an indication of what's happened within each candle. So if this is a daily candle, for example, we know price has moved up to this point here, we know price has moved to this point here, or we know it's closed here. But we don't know at what points within the day price was up here, price was down here, floating in between, because obviously to get from the open to the close you have to travel through this price range. So we don't know what point within the day this has happened. That's where we can jump down to a lower time frame like the hourly, and we'll have 24 hourly candles within this daily candle. So 24 different candles making up this price range. So we might see 10 candles from the open move up, and then within 10 candles more we move all the way down, and then within the final 4 candles we move slightly higher to close the day at this point. So I hope that makes sense. Now then, I wanted to cover some sort of candlestick patterns or analysis. So I've got a couple of indicators on TradingView, my scripts, so trend bars and percentage close. So these two indicators here. So the trend bars are the red and green arrows above and below the candles. That's the trend bar indicator. And the percentage close of candle is this oscillator down here. So like I said before, candlestick sort of represents price action throughout a given period of time. So it's telling you a story. So the market's made up of buyers and sellers. So each candlestick represents the sort of the fight or the battle between the buyers and sellers, and you can read that. So here, this big bullish candle here, you've obviously got way more buyers in the market than sellers. So this indicates a strong bias towards the buyers, or a strong bullish bias. Yeah, again, bullish means it's moving up, bearish means it's moving down. This candlestick here, for example. So within this, again, we're on the hourly chart on the euro dollar. So within this hour, Price has moved. Is there a way of getting rid of this? Sorry, 1 second. Yeah. Actually, I don't want the crosshair. I'll have to deal with it for now. So within this hourly candle then, price has opened at this point here. Price has moved all the way to the downside to the low here. You see that if I take the crosshair away, the low here. And then price has moved within that hour, price has come all the way down here, been rejected, and moved all the way up here to close higher than it opened. Yeah, there's the open. There's the close, so we've closed higher than we've opened. So even though within the same hour price has actually moved significantly to the downside, within that same hour a load of buyers have come into the market and said, nope, we're not giving in to the sellers, we're going to reject your selling pressure, and we're going to push price higher to close higher than we actually opened. So this candle tells a story, and you can see that here. So take this previous price action here. We've come down. Again, if you're not familiar with support or resistance levels, then you can watch some other videos. I personally don't trade support or resistance levels, so I'm not going to start delving into that, but there's plenty of videos out on YouTube and social media that cover support and resistance levels in all different ways. But just take this for example as a support level. So a support level acts as a floor where price can't break through that floor, and resistance acts as a ceiling. So let's just call that this here, where price can't break through that ceiling. So it bounces off a ceiling here, bounces off a ceiling here, bounces off a ceiling here. So support is a floor and resistance is a ceiling. So price within the last, so this is the 7th of April, you can see at the bottom here, 7th of April up till the 9th of April, so the last couple of days price has come down, it's hit this floor, this support level, it's then had a bounce, again it's hit this floor or support level, it's then had a smaller bounce, think of it as a bouncy ball coming down, hitting the floor, that initial bounce, it's got a fair bit of momentum coming down, so the bounce is quite big, it's then come down again, bounce again, but the bounce is smaller this time, so then come down again, bounce is smaller still, and at this point here, because we've tried to break through this support level once, twice, now the third time, the buyers have come in and said, nope, you're not getting through this support level, we're rejecting that, and we're actually going to close on a bullish close. So this candlestick here is a nice rejection candlestick, and this can be one of those candlestick formations that you look for in order to gauge a reversal. So this could be an entry reason. So you've got your reason for looking for a trade here as a support level. So each trading strategy should have a reason to enter for a trade, a reason to look for a trade, sorry, an entry reason, and then profit targets and stop loss targets based on objective quantifiable reasons. So you've got your reason to look for a trade because it's coming down into the support level, and now you've got your entry reason, this candlestick formation here. So the nice wick to the downside, so this is a candle wick, this line here, a nice wick to the downside and a close in the bullish direction. Yeah, so if you were to enter long here, you've obviously had a nice run of it here. So let's cover these indicators then, or this oscillator first. So this is a percentage close of candles. So like I said, at OT trades I like to quantify and objectify everything. In terms of my trading, I don't trade anything like this. I'm just using this as an example to cover the candlesticks. I trade using the patterns, which every single thing about my trading is quantifiable. So in terms of quantifying this obviously it looks like a rejection candle, but how do we quantify that? Well, this oscillator down here, it shows at the top is 100%, at the bottom is 0%, and that stands for the close of the candle based on the entire range of that candle. So the range of this candle here then, if you follow the horizontal line to the right, 1.08409 up to, again, this point here, follow the horizontal line to the right, 1.08608. So what is the range of that there? About 20.3 pips. Yeah? So 20.3 pips. Out of that 20.3 pips, we've closed 96.12, just call it 96.12% of that candle. We've closed in the top 96% of the entire range of that candle. Now that's pretty obvious here because we've got 0% down here, we've got 100% at the top here, and we've closed relatively close to the top of that candle. So we're closing at 96.12%. Sorry about the dog in the background, she's going nuts. Yeah, so 96.12%. So not only have we got this visual representation of price being rejected to the downside and close in the bullish direction, which is a good reason for entry, we've got a quantifiable reason for getting in now. Yeah, so I hope that makes sense. Again, anything that closes above this 80% range or closes below this 20% range, you could class as a quantifiable reason for entering a trade. So a close above 80% indicates a strong bullish candle, so we're looking for price to move higher. Anything that closes below 20% is a strong bearish candle, so price moving lower. So here, for example, strong bullish candle to the upside. Here, just about strong bullish candle to the upside, strong bearish candle, strong bullish candle here. Yeah. So obviously this, like I said, this isn't going to work if you're just looking at it in a random place in the market. Again, we need to cover this based on our reason for looking to enter a trade, support level. Our entry reason is this rejection candle coupled with our strong bullish sort of indicator or oscillator here. So we've got a quantifiable way of telling us that yep, this is a strong bullish candle, therefore we can enter a trade here. Yeah, there's no good just using it in the middle of all this consolidation. Okay, strong bullish candle here, yep, okay, but you've already missed all of this, so it's time for the market to sort of chill out a bit here. Now that we've had this consolidation here, then maybe, yeah, if it pulls back down into this support level, you could look for another strong bullish candle to the upside to get on the breakout of a, I don't know whether you would call this a bullish flag pattern, maybe. Again, I'll probably get a lot of stick for that because I don't trade these patterns, but if price were to move down to this level, then you can look for a strong bullish candle, again, similar to that indication we've had here, a bounce off of this support level and a move to the upside. Maybe you even just look at a move to this previous resistance level. But these are giving you reasons for entry coupled with your initial reasons, yeah? So let's just remove drawings. So going back to the trend bars then. So these trend bars, so the red arrows indicate trend bars in the bearish direction, and the green arrows indicate trend bars in the bullish direction. So bearish, red or black, indicates price moving down. Bullish, white or green, indicates price moving up. So all these stand for is if a candle body close is greater than 50% of the entire range of the candle. So bear with me whilst I try to explain that. So let's find a nice clean candle here. Let's do this bearish candle here. So this bearish candle here. So we're taking this red arrow here. So we've opened. Let's actually just do the whole range to begin with. Right. So we've got the high of the candle at this point here. This horizontal line represents the high of the candle. We've then come down and we've got the low of the candle just here where that finger points to. Just here. So that is 45.9 pips. 45.9 pips. Okay. Now the body of the candle, we've got the open here. Let's draw another one on. Let's do it backwards so that the text doesn't overlap one another. So we've got the open of that candle here, and the close of the candle here. So the body of that candle is 30.9 pips. So the full range of that candle is 45.9 and the body is 30.9. So these trend bars, let's do calculator. So these trend bar indicators will form once the candle's closed if the body of the candle is greater than 50% of the entire range. So 45.9 divided by 30.9, done that wrong, backwards, 30.9 divided by 45.9 times 100, 67.3%. So the body of this candle is 67.3% of the entire range of that candle. Yeah? Therefore it's greater than 50%, and therefore this trend bar indicator has been inputted. Now again, going back to our previous support level here, let's just draw that on roughly. So just a rough support level here. So coupled with this rejection candle, a close of 96.74% of the entire range of that candle. If you're waiting for further confirmation, you can wait for this trend bar after that. So you've got the obvious visual representation of price action in this rejection candle. You've got the quantifiable 96.74% close of that candle, and you've got a trend bar where the body is greater than 50% of the entire range of that candle. Yeah, so the range of this candle, although the body is relatively small compared to the entire range, that's because the sellers have been rejected within that same candle. So that in this candle there's still selling pressure, but the sellers have been completely rejected, which is indicated by this 96% close. And in this candle, the sellers are pretty much all faded away. There's no selling pressure, hence why this candle, the body of the candle, is greater than 50% of the entire range, because there's no sellers coming in pushing price lower, and then the body is sort of a small body on the candle coming back higher. The bulls have taken control here. Yeah, so a very conservative entry would be wait for this, come back down into our support level. We get this visual representation of price action here with this rejection candle. We'll get the quantifiable way of entering based on 96% close. We then wait for a trend bar again, indicating that the sellers are completely gone, and where the bulls are taking control of the market. So we'd enter up here now. Rather than down here, we'd enter up here. Stop loss below this support level, and profit targets up here somewhere, even if it's a 1-to-1 risk to reward. So if we were to enter here, stop loss below the low of this support level, randomly, you just call it a 50 pip stop loss, and then 1-to-1 risk to reward. Yeah, and you would take profits on this candle here, just keeping things relatively simple. If you had a 2-to-1, you wouldn't be out of it yet, so you'd be waiting for price to move higher. Again, this is just randomly, I've just come up with this now, and I wouldn't recommend trading this. But these are some sort of the indicators that you're looking for entry reasons. So that's what the candlesticks are mostly used for, is entry reasons. Each individual candlestick is used for an entry reason. You've got the entire sort of chart, which is made up of candlesticks. That's what you're reading the price action with, but individually you're looking for an individual candle to give you a reason to enter a trade. So I think that pretty much covers everything. I'll wrap things up there. Again, any questions, you can drop me a message through my website, or even give me a ring on my website. Let me know. I hope that was of use to you. So again, thank you for watching. Speak to you soon. Bye.